Meta stock absolutely crushed this past year, down over 60%. Mark Zuckerberg's net worth nosedived by over $70 billion this past year. I think a lot of folks would still be happy to change wallets with Mark Zuckerberg, even after that $70 billion drop. I think he's still got a few zeros to his name. May not be looking to change places. And you're looking at Meta Platform stock now in this deep value territory, under 8 times EBITDA. Historical studies have shown that if you buy stocks in a basket approach under 8 times EV to EBITDA, that has generally outperformed the major indices over time. So this is in that sort of deep value territory. So it's very interesting to see this leading online platform trading at this valuation. This does raise the question of, well, is Facebook or Meta stock now a value trap? And what do I mean by that? I mean, when you buy something that's perceptively cheap, you'd say, hey, it trades at this really compelling valuation. But what if the underlying fundamentals actually deteriorate even faster than you expect? In which case, you're really just buying this sort of melting ice cube, in which case that perceived cheap valuation isn't really there, and you don't get the returns that you think you're going to get. A lot of investing is focused on some sort of terminal value. What's the stock like? Look, what's the underlying fundamentals 5-10 years down the road? And if that is a melting ice cube situation, the terminal value, a lot of the value for this stock will decline. And so that is something investors, and I'm planning on talking about in this video. Is this a value trap? What do I think about Meta stock from here? Well, first of all, thinking about Facebook, they have never had a shortage of problems. They've always had lots of challenges to deal with. For example, you have bad actors, you have Russia and China creating inauthentic pages and groups, spending, however, hundreds of thousands of dollars on the platform to try to create some, misinformation, trying to, impersonate legitimate news organizations in Europe. And then you also have on the competitive front, TikTok rapidly taking share. For anyone that's sort of like, hey, Facebook isn't doing enough, I think first you should criticize our politicians for saying, wait a second, you have TikTok, which is owned by a Chinese company, before you start saying, hey, Facebook isn't doing enough in terms of these bad actors. I think they're doing a lot, and there's some low-hanging fruit that we should consider first with platforms like TikTok. And so then you look at the leadership at Facebook. Leadership, is this rats, leaving a sinking ship sort of aspect, where you see Sheryl Sandberg stepping down as COO, you see the CFO transitioning to chief strategy officer. That creates zero confidence with a lot of shareholders, as they're like, wait a second, this CFO consistently sort of whiffed in terms of the guidance, saying, oh, well, this is going to be how it is, and then it's either way conservative or just way off. So, and investors aren't super confident about that. And so then you look at their results, and they're posting arguably weak results in the most recent quarter. 1% revenue drop, a 32% drop in their core income profit, or core profitability, income from operations. And so part of that is the fact that as they've sort of faced some struggles, and they are facing some legitimate struggles. The question is it a permanent impairment, or is it sort of a short-term challenge that they're facing? And there's a lot of different aspects to it. You have the strong US dollar. That is one of a few key aspects, because if you have a company reporting in US dollars, and let's say the UK pound and the euro is getting completely pounded lower, then you're going to see it becomes much harder to report strong US dollar growth. And that is something that impacted their most recent quarter, where they would have reported a couple of percent higher growth. That's one aspect. You have Apple reflecting some monopolistic tendencies, where they're effectively saying, hey, your ad business isn't as good as our ad business, and we want to grow our ad business. So they're changing their iOS policies to screw over Facebook. And so you're having that aspect, another example of low-hanging fruit for US politicians. And then I think the third key aspect is you're looking at recessionary impulses in the economy, where, this combination of inflation, stagflation, where effectively consumers, businesses sort of saying, hey, the discretionary good advertising, yeah, that's, buying that widget, we're not going to be able to spend as much on that marketing because demand isn't there, because people need to buy their food, they need to pay for the rent, and the rest of the economy is sort of not doing as well. And so that's an aspect. So you are seeing that recessionary impulse. But also, I think a key aspect, by part of the reason why the stock has gotten crushed, is as their core advertising business, and keep in mind, that's the vast majority of their revenue, like 95% of their revenue. You see, most recent quarter, $28 billion advertising, only $200 million from other. So the vast majority of their revenue is advertising related. They do have Reality Labs, which is the Oculus and the initiatives they're making in AR and VR, but still the vast majority is from their advertising business. And so you see Family of Apps operating income, that profitability has come down, but part of the reason why you've seen this 30% plus drop in profitability isn't just from the advertising business, but it's also from the fact that management's sort of saying, well, to hell with it, we're still going to keep investing, doubling down on our Reality Labs losses. And you can see that they've spent, $10 billion over the last year, and it's been increasing over time. And this is honestly what gets shareholders really worried. And this is a key aspect that investors should understand about stocks and how they're priced, is that it's not only about future outlook, what does this business do long term, but it's about what are you going to do with that cash? What are you going to do with capital allocation? For a while, Facebook traded at a premium that was well deserved because they were perceived as really prudent capital allocators. They say, oh, you just spent like $1 billion on Instagram and now it's this incredible, business. Wow, you guys are brilliant capital allocators. Now you're sort of at the other end of the spectrum where investors are saying, you dummies, why are you guys spending $10 billion on augmented reality, virtual reality, Oculus? This is just a sinkhole. Is this actually worth it? And that change in sort of saying, wait a second, that's $10 billion that you can be rewarding me, the shareholders, with buying back stock at a cheaper level, that has a huge impact on the sentiment for the stock. Sort of saying, wait a second, is that cash flow actually going to go to shareholders, or is it going to get sort of burned up in Zuckerberg's sort of pet projects? And when that sentiment shifts from, hey, smart capital allocation, to Zuckerberg's nuts, that sort of mentality results in a much lower valuation. I'm not saying I think Zuckerberg's nuts. I think he's incredibly shrewd. I'm not sure that this bet is going to work out, however, but he's clearly making a ballsy bet saying, hey, I do not want Apple to be able to disrupt me in the future. I want to own the next computing platform in virtual reality, augmented reality. And so I'm very curious, how that plays out. But this is a key aspect for why the stock is lower. Another key aspect is you're looking at competitors. You look at, advertising players like the Trade Desk, which I also own stock, and I do own a little bit of stock in Trade Desk, a little own in Meta, a little bit in Google. A lot of these advertising behemoths, Google and the Trade Desk, both growing much faster than Facebook. You look at the Trade Desk growing revenue in the first half of this year around 39%. They're absolutely crushing it. When you look at this business taking market share, and that is a red flag for me. Whenever I'm looking at a business or saying, wait a second, here's an industry and you're growing slower than the industry. What's up? Why? Not what's up. What's up? What's going on with this business? Why are you losing share? That is a red flag. And clearly there are some company specific aspects to it, like the iOS disruption with them. But it is concerning, to see, hey, other players in the ecosystem are sort of taking their lunch. So then the question is, okay, so where does Facebook stock go from here? Where does Meta stock go from here? If you're struggling with this investment environment, consider unrivaledinvesting.com for new ideas and a community of like-minded investors. In full disclosure, this is not financial advice. So thinking about Meta, where does it go from here? Let's understand from a very fundamental perspective how to value this business. The crux of this business, you would not have an advertising business if you did not have the users. So before you assess, hey, what are the advertisers feeling? You need to make sure actually are users still using this? And you look at this and their family of apps are still reporting nearly 3 billion monthly users. So really, really strong demand. This is still one of arguably the infrastructure for the planet Earth. When you think about 3 billion users, nearly 3 billion users out of 7 billion people in the world, that is a heck of a lot of effectively people still using their platform, and it's growing. And even when you look at their legacy apps, their legacy moneymakers like Facebook, the legacy Blue app, that is still growing in most regions. You look at US and Canada, that's up slightly around 197 million users. Europe, however, has been declining. Now that might be a bit of a red flag, sort of saying, hey, is this a leading indicator for things to come? Because when you think about this business model, it's all based on effectively users, number of ad impressions that you can show, and the amount that you can charge for those ad impressions. And so when you look at those different variables, it's like, well, wait a second. If the number of users are going to go get down, then you're going to see the number of ad impressions going down. And then, hey, what's that do to pricing? And, what's that? That's going to hurt revenue unless the advertising price, the price for impression goes up dramatically. So this is sort of a mixed picture. I would say overall still favorable. You're still looking at Facebook increasing their active users in rest of world, Asia Pac, and US and Canada, but you are starting to see maybe some signs that it is flattening out. It'll be tougher to grow going forward. And so that is a question of like, okay, well, if you're not growing your user base going forward, that means you're going to have to grow either ad impressions. So people are going to be seeing less and less of the content they're actually interested in, and more of like, hey, here's some ads that I may or may not like. And also the pricing. So those are really going to be the key drivers. So that is a core engine for Facebook's business that is arguably going offline. Maybe, won't generate growth going forward, or maybe it's very slight growth going forward, something that investors need to consider. And so they are investing, if you do spend $10 billion, they are starting to show some really cool stuff. For example, this guy, Alexander Winkler, he was talking about how like, look, we can now effectively map out where someone is and what their body is doing. And it showed this guy running around a room just from the sensors on the Quest headset because of the AI, the machine learning that they've done. So that is really a remarkable feat where you're not going to have really intricate, VR setups when you could just have this thing on your head that sort of says, hey, this is what's going on around you. That is making big steps towards the Ready Player One, scenario. And so that is, quite interesting to see. Now, getting back to that question of, is this a value trap where the underlying fundamentals will be declining worse? Sort of the fundamentals sort of outpace the cheap valuation. And so I look at this and I'm sort of saying, I do not have a high degree of confidence. I do not have a high degree of confidence on their AR and VR bets. It's too soon to tell. I also think that it's alarming to see some other players in the ad ecosystem taking share. And so I'm looking at this and saying, hey, though there are some very real red flags, but I'm also thinking that the core value proposition of effectively socializing with people around the world, connecting friends and family, that hasn't been disrupted. They still have that core customer base, and that arguably is a long tail in terms of profitability. You're not seeing that decline in a meaningful way. You're seeing a slight decline in Europe, but otherwise a growth with their family of apps and growth broadly with their Facebook apps. So I'm thinking at this point, it's not going off as a like, hey, this is the ice cube that's rapidly melting. This is a value trap. So that is my perception. It's not an opinion that I have a strong conviction in. It's something sort of saying, let's take it one quarter at a time based on how they're delivering. This is more like the setup that Warren Buffett talks about, sort of saying, hey, when you find an exceptional company with a one-time problem, that can be an exceptional bet. And so this is like, I'm more leaning towards that perspective, that this is a company facing sort of a whirlwind of challenges right now, like Apple's policies, like the strong US dollar, like the recessionary impulses that you're seeing. And so you are seeing those elements, with this, but I don't necessarily view that as a structural destroying the business aspect. I view this as arguably closer to a shorter term problem versus hey, the terminal value of this business has gotten impaired. And so when I look at the valuation, now the stock's around $135 a share, around $370 billion market cap. It is really remarkable. I started off this video talking about their cheap valuation. They're effectively trading at under 10 times earnings for their family of apps, so their advertising business. And honestly, this isn't that crazy shocking. I've actually called out several times that in the 1970s, several of the leading advertising companies in the 1974 crash fell down to like 3-5 times earnings. So seeing this is sort of like a rhyming with history aspect of like, hey, you can have these great businesses fall to zero as people say, hey, I don't know what's going to happen to advertising budgets because recessionary impulses really are concerning. I'm not sure how bad, how bad the depths of the recession could be. Looking at that, though, it is quite cheap. If they're able to resume some sort of growth in the years ahead, where you're able to compound at 3% to, let's say, to 11%, a ballpark range figure around 10%, give or take, and you're able to get some sort of multiple expansion where people get more confidence in this business or saying, hey, this has gone from a declining business like you're currently looking at, around slight decline to slight growth, that could have a huge change on sentiment. And it's, throwing back that cash that they have on balance sheet, effectively 50 billion in cash on balance sheet, you're effectively looking at and factor in that they still are generating, meaningful cash flow, let's say 20-30 billion dollars in free cash flow, even after their sizable investments. Then what you're looking at is, effectively, if they execute in this scenario. And keep in mind, this is a hypothetical valuation framework. This is arguably one of the best setups that I've called out here on my channel. You're effectively saying, hey, if they execute, if this is not a value trap, if they're able to grow their underlying business in the years ahead, then you're looking at potentially, let's say, 300% upside on the high side scenario, even more if they're returning cash to shareholders. Now, that's going to require a lot of execution. That's going to require them weathering the storm, the upcoming financial storm that you're seeing, with recessionary impulses, effectively contracting economic activity. I personally own a small stake, but I haven't seen yet that data point that says, hey, now it's sort of that high conviction where I want to make a big bet because of these aspects that I've called out in this video. So I do own a bit of it. I personally would rather buy after I start seeing a slight recovery, or after I see a point where I'm like, okay, this business is just so, crazy cheap that I have to own it and it's not going to melt. And I'm just not, it's not clear to me yet. Part of the fact is that I just don't use Facebook. I don't use these social apps. I mean, I use YouTube, I use Twitter, but I don't really use Facebook. So I guess I'm part of that, 3-4 billion people on earth that don't really check in that often. I have my profile and stuff like that, but I don't check in. So I don't have a strong conviction there. Now, I do know businesses that are like, hey, this is a lifesaver. This is an incredible platform for us to advertise on. But once again, that aspect, that value will decline over time if users start leaving the platform. So that is sort of less clear to me. And so it's just sort of taking it one quarter at a time. I overall like the setup. If anything, looking at it, I am more inclined to add personally at the setup. But I'm also, once again, very aware of the macro, very aware that, hey, with a recession and with the Federal Reserve sort of squeezing that economy, and you're seeing the economies around the world going to get squeezed, especially with a stronger dollar, you're sort of saying, hey, is this really the best that you're going to get, or you're going to get an even cheaper valuation because this business is ultimately going to see let's say it goes from a 1% drop in revenue to a 5 to 10% drop in revenue. And when that happens, then people go like, oh my gosh, get me out of here. Like, then it's just like sold to you aspect. And that's what happened in 1974, where people are like, don't own these advertising stocks. It's disaster. And then they absolutely ripped, afterwards. So I own a little. And I don't have high conviction on adding significantly, but there's a reason why I own a little. Because I look at it, I look at the setup, and I'm thinking, hey, if they execute, there's a lot of upside. And by the way, this gives no credit to their $10 billion annual bet on Reality Labs, which who knows? Who knows how that plays out? But I'm curious, I'm sort of thinking over if you have a different perspective on sort of like, Daniel, this is the reason why I've made, Meta 30% of my portfolio, and it's because of these aspects. I'm very curious to hear it. I look at this and it's arguably one of the best setups I've seen, but I want to own businesses that aren't cyclical. Like, that's a key aspect with my own investment approach. Like, I want to own businesses that are like, if you look at my top holdings, like I call that out to my subscribers at Unrivaled Investing, like the amount that I dedicate to sort of the cyclical industries, I don't like to put a lot of my portfolio to it. So most of my portfolio is tied to sort of structural businesses that need to provide critical goods and services. Maybe it's insurance, maybe it's a medical product, maybe it's something for law enforcement. So I look at those different things and sort of saying, hey, even if the Federal Reserve, let's say, overshoots and you get a depression, like, it's not as bad for those businesses than something cyclical like Facebook, where it's like, oh my gosh, how cheap could that get? So I'm still looking at this thinking, man, this is getting interesting. I am licking my chops here, thinking this is certainly looking interesting. So if you have a take on it, I'd absolutely love to hear it in the comments below. Thanks so much for watching Unrivaled Investing. If you enjoyed this video, please make a point of hitting that thumbs up, hit that subscribe button. Thanks for watching.